It's December 2nd, 2025, the market is open, and SanDisk is behaving like a paradox you can trade. SNDK trades in the United States on the NASDAQ in US dollars in real time. The stock is roughly $207, down roughly $3, about a 2% decline. Prior close was about 210, and the open about 212. The intraday range is brutal, roughly 193 on the low and roughly 217 on the high. That kind of spread is not background volatility. It's a signal that positioning, flows, and sentiment are competing with fundamentals for control of the tape. Zoom out and you see the year-long confession. The 52-week range is roughly 28 to roughly 285. A stock that spans that much territory is still in valuation discovery, meaning the market has not settled on a stable definition of fair. Now put the hard snapshot on the table, rounded. Market cap is about $30 billion with about 150 million shares outstanding. Trailing 12-month revenue is about $8 billion. Trailing net income is a loss of about $2 billion. Trailing EPS is about minus $12. With negative trailing earnings, a traditional PE ratio is meaningless. That part is ordinary for a business coming out of a down cycle or a transition. What is not ordinary is what sits right beside it. A forward PE around 13, analyst consensus summarized as strong buy, and an average target price around $218, only around 5% above today's quote. Forward PE is not history. It is a market bet that positive earnings are arriving and will be durable enough to justify today's price. So why does the past still look damaged while the future is being priced like a profit machine? Start with structure. As a standalone listed instrument, SanDisk is new. Some market profiles listed as founded in 2024, which often reflects the legal identity of a newly independent company after separation, rather than the age of the underlying business. In market terms, that matters, because newly independent entities frequently trade erratically. The shareholder base turns over, reporting lines change, costs are reallocated, and investors have limited standalone history to anchor models. The story spine is a chain of dates that created the tradable instrument. February 12, 2025 was the record date tied to the separation. February 21st, 2025 was the distribution date. February 24th, 2025 is when SanDisk began regular way trading on the NASDAQ under SNDK as the separation from Western Digital was completed. That is when SanDisk inside a parent became SanDisk that must stand alone. To understand why the price action feels mysterious, compare what happened here to what normally happens after a spin-off. Normally, the first phase is mechanical forced selling. Parent company shareholders receive the spin whether they wanted it or not. Many institutions sell immediately because the stock fails their mandate sector exposure, size requirements, index constraints, or volatility limits. That selling is